Hi, David here, CEO and founder of the Freedom Founders Mastermind community. Just picked up an article today. This has been out in the news for a little while. Wall Street Journal picked it up a few weeks ago, but just reviewing again some additional syndicators or syndications gone bad. What does this mean for you as a potential investor? We have had a 14-year, coming out of the great financial crisis back in 2008, 9, and 10, we've had a 14-year run of everything running uphill. Money figuratively running uphill in all equities, all classes, stock market, crypto, real estate, you name it. Cheap money, low interest rates, subsidized by the government, has allowed a frenzy in speculation. And that's exactly what this is. This is an article about the Tides Equity Group. When I hear tides, I think about Warren Buffett talking about the fact that when the tide goes out, those who have been swimming naked are exposed. In this case, this group and many others are being exposed for their lack of understanding of a full market cycle. See, it's easy when we have a bull run market like we've had the last 14 years for anybody to make money and look like a genius in raising capital and putting them into projects, asset classes that basically just turn over, and the next greater fool theory means the next person who buys them thinks that they can buy it and sell it to somebody else and somebody else and somebody else. This eventually runs out. It's like musical chairs. When the music stops, a chair is pulled out and somebody loses. Tides Group out of Houston, or the group that they bought their properties out of Houston, $7 billion worth of apartment equities in Houston with floating rate mortgages. Floating rate, that means not fixed. That means when they took the mortgages out, they took the variable rate, meaning the interest rates could fluctuate, but they thought, oh, no, interest rates will never go up. It's going to be this way forever. Again, the lack of knowledge, lack of experience in a full market cycle. They only know half a cycle. This is very dangerous. This is what's happening as the refinancing begins, when these variable rates and maturity dates of these short-term loans that many of these syndicators took on because they're cheap, easy to get, low underwriting, and now the chickens are coming home to roost. They cannot refinance these properties because the valuations are coming down. They never got the occupancy level up. This is a big problem I've seen across the board in syndicators, whether it's multifamily, self-storage, mobile home park communities, you name it. They buy the projects claiming to be these great operators, but really all they are is marketers and capital raisers. So they raise all the capital with low interest rates. They can carry. As soon as interest rates start going up this last year, it's game over. Net operating incomes are squeezed and they have no more cash flow. This group, Tides Equities, is now asking their investors who've already pumped in millions of dollars into their equity investments. They're asking for more capital. And these guys have non-recourse loans. These syndicators can walk away and just trash the whole thing if they want to. Now, if there's corruption or fraud in their books, that's a different story. But if it's simply mismanagement, investors are out of luck. If you're an investor who has been investing in any kind of syndications, real estate, other things where you really don't know what you've been doing, but you've been lucky, fortunate because of the way the market's been going, be very wary at this point. There's still many people out there raising capital hand over fist because why? They have to. That's where they get their fees. That's where they get their money. That's where they get the juice. They don't really care if the deal goes to fruition and gives that IRR or equity multiple on exit. I mean, it's great if it does, and when they do, everybody makes out, but now that's not going to happen. So they want to keep the pipe churning. You as the investor in equities, you are the one at risk. You're the one who is going to lose your capital if you don't dig in and understand all the elements of what goes into a syndication, and most of you have no clue. You've just been riding a wave that's about to run out. I warn you, be very, very careful with your capital in the current market cycle.